I could either have snoring dogs or I can have crying dogs, which, again, what is your preference? Good morning, Secret Agent Charlie. Good morning. Tall Tex, yes, the jacket is back. Good morning, Eric in Northport. BS Smokey, good morning. UK Ray, Wild Hog, Bob, Kev, glad to see everybody. Monica, thanks for joining us. And I Pencil, of course. Good to see everybody. All right, so a lot happened yesterday. I don't know if you follow the news. You guys like the news? Well, Purple Tie over here did not commit to a new rate cut in December. CME Fed Watch, CME Group, taking us through. And we are currently now on to the December at 68, just to show you how much this has changed in the last 24 hours. The odds of no rate cut have risen from 3% to 31%. And that is a surprise to, obviously, this market. Resultantly, it's put us in a little bit of an unusual position because we know we need to cut rates because we have some challenges and some issues in the SOFR. SOFR, the secured overnight rate 2 days ago, hit 4.31, which is above the range of the Fed funds rate. But we're down to 4. Odds are low. The question is, something wrong in the banking sector? Well, as I will note, yeah, something's off. I don't know what it is yet, but I do heed warnings when the triple bear ETF of the financials raises above its 50-day moving average. We are seeing hedging in the banking sector right now. The KRE and the DPST also under some pressure as well, regional banks. So what is coming? That's what we're going to find out. My concern is there might be some sort of injection at some point, but they are going to end QT in December. We'll talk a little bit about that. We'll get to the runner at 9 o'clock. Once again, you always join us each day because it is hot in this house. So the jacket might have to come off. You're joining us each day because, again, this will be another wild, interesting day in the markets as we start to reprice risk in the wake of the Fed's meeting yesterday. In addition to that, we have 3 of the largest stocks in the S&P 500 reported earnings yesterday. Very wide moves on these as well. We saw that happen with Microsoft. We saw Meta get cracked, right? Nearly a 9% drop yesterday. And on top of that, Alphabet just absolutely screaming higher. We're going to break down those names as well momentarily. But we'll talk about top screens, top breakout stocks, and where smart money is positioning. Momentum is under pressure. So we saw a lot of outflows yesterday on the Russell side. What does that mean? We saw a large number of Russell 2000 stocks crack lower and carry that momentum of down 5% on the week, down on the month. Caesars got beaten up badly, 15% move to the downside. But then you have other names like Royal Caribbean still under pressure. These are key momentum stocks. I know that everybody's sitting here going, wow, cruise lines. No, these stocks are pure momentum stocks. They have tracked momentum perfectly. They trade in very strong relationships to names like Tesla, Royal Caribbean, NCLH, CCL, all breaking under those key moving averages and all continuing lower. Again, this is not a reflection of consumer spending. This is a reflection of liquidity and momentum in the broader market itself. Technology stocks are still doing the heavy lifting. WDC had a big move yesterday. Palantir is up another 5% this morning, or was up 5% yesterday, forgive me. Palantir had a nice move yesterday. STX, TER. So the software technology infrastructure names still look solid, but it's down in that lower region of the S&P 5, or forgive me, of the Russell 2000 that is under pressure. Number of stocks breaking out versus breaking down in our poor man's measurement on the S&P 500 has moved to -8 intraday. Right now, we got about an 8 stock move here. Going to be a little bit cautious, particularly in everything except for utilities, materials, consumer defensive, technology, communication stocks, industrials, financials, and consumer cyclicals, all under pressure, particularly at the lower end of the market. This all goes back to the news yesterday. As you know, we have a central bank here in the United States, and what a crackerjack job do they do every single day on our behalf. So if we just pay very brief attention to what happened yesterday, the Federal Reserve lowered its benchmark by 25 basis points to this range of 3.75 to 4. Now what we're looking for is questions around, I got that wrong. Forgive me. I'm all over the place this morning. Ha. See, just do everything on the fly. It's fun. Powell warned that future cuts are not a given, emphasizing a data-dependent approach as the Fed paused its balance sheet reduction amid market stress. Tickers in play, SPY, Qs, TLT, and the DXY. What do you want to be watching? Well, what's the Fed going to do through December? We're going to get some speakers soon. We're going to hear why this was a divide of why there was this divide. Two people voting against it. And in fact, somebody calling for no cut whatsoever. No cut. I got a little ahead of myself, right? Because again, when we're looking at this, there's no clear outlook at all for that decision. And yes, the benchmark is between 375 and 4. I just cannot read the Fed watch this morning. So what are we paying attention to? Can the markets handle the end of QT without fresh liquidity shocks? That's really going to be the thing. Now, obviously, $5 billion is not a ton of money, but the question really still remains in that regional banking space. How is that pressure going to last? U.S. equity futures and global risk sentiment cooled a little bit, obviously, paying very close attention to our futures this morning. We're not down a lot, but the Russell is under some pressure. Feeder cattle are up. Hey, that's exciting. Orange juice getting crushed. That's exciting. No pun intended. With rate cut, that rate cut was expected. The Fed's lack of forward guidance is the issue. They don't have a crystal ball, and the crystal ball, if they had one, was broken. Big tech earnings offered mixed signal. We'll talk about NVIDIA. We'll talk about Microsoft, and we'll talk about Apple in a moment. But the question is, can earnings sustain the momentum in this market? And we saw yesterday this move on Microsoft, right? Chopped down 2.2%. What are people concerned about? They're concerned about spending. They're concerned about whether or not these companies can sustain these earnings with these massive levels of capital expenditures in the AI space. And we're going to keep a very close eye on defensive stocks. So we'll be watching real estate, but we'll be looking at consumer defensives, which really got beat up bad yesterday, and see if they can sustain. The dollar, as of yesterday, moving into this morning, 99.36. U.S. dollar strengthening because, well, not going to cut rates. That's an issue. Markets are repricing in fewer cuts in 2025. And the question now is, what's this going to look like in 2026? Now, will higher for longer lift the dollar and weigh on commodities and EM? Emerging market. Well, gold and silver did not like that news yesterday. We're back under 4,000 and we're back under 48 on silver. But again, all roads point to more monetary debasement. And it does go back to the note that Powell has said they are not going to get to 2% inflation until 2027. But he said that they were going to get to it in 2025 back in 2022. So services inflation still remaining a big issue. CPI coming in at 3% last week. A lot of uncertainty and a lot of questions remain. So if we move through this and we look at conditional easing as the new normal, the Fed's message to traders is be cautious. Rate cuts are not on autopilot and liquidity will be data-driven. And that means volatility spikes are likely as markets toggle between easing hopes and inflation fears. The key themes for now are liquidity, labor, and leadership from the Fed. Count on one of them. In addition, stay nimble, hedge rate exposure, and watch bond yields right now. It's a good time to be playing defense in this environment. We still don't know. There still are a lot of unknown unknowns. I can't quite figure out what it is yet, but I still have that feeling in the pit of my stomach that has remained since late September. Meta earnings came out, big numbers. Again, There was a GAAP EPS, which was down sharply, 83% on a tax hit. This was really one of the core things to pay attention to, but really it's the CapEx guidance. These companies are putting astronomical amounts of money into AI data center spending. And keep in mind, this was one of the things that was a major challenge for Meta back in 2022. Mr. Zuckerberg wanted to spend the same amount of money in real terms on the metaverse as the United States spent on the entire Apollo mission program. And they had to abandon. They had to pull the ripcord back in November of 2022. Now, the monetization is really around how much money they're putting in CapEx to offset the rising costs associated with that. And if that spending pressure is going to impact margins and valuations. There has been a lot of criticism in the last couple of weeks from authors, particularly in the RIA space and particularly registered investment advisors, and just commentators who are following this on the macro level, and that the returns on investment for all of this has not been really that great so far. So if these costs continue to pile up and the return on revenue is not, or return on that CapEx is not considered strong, what are shareholders going to do? And will there be a paradigm shift on this? A guy by the name of Just Dario has a website called justdario.com. His name is Dario, I believe. But he argued the other day that all of this CapEx spending, we will look back and say that it is the greatest waste of capital in history. That's an aggressive statement. But for right now, you can see that the investors are getting a little bit nervous about this. Alphabet blew the doors off. But again, CapEx raised to $91 to $93 billion for AI data centers. Their advertising strong, their cloud margin was strong. Again, though, all of this infrastructure build out to defend their competitive edge. And I talked to Gianni about this yesterday after the bell. It was when this stops, and it will, where is that bubble going to be exploded? It might not be in Apple. It might not be in Alphabet Meta. It will likely be in the infrastructure plays that are going to get beaten up. So keep a very close eye on the AI infrastructure names, the companies that are building the data centers, because the second that tap ties turns off, these names can move much, much lower. Microsoft, oof, this was something too. Same thing. Massive amounts of AI spending, massive amounts of competitive pressure in Azure. How will Microsoft balance CapEx growth against its profitability? All of this stuff is very frothy. We know it. You can see it from 1,000 miles away. But it's important to note that in the world of capital and liquidity and how markets have operated in the post-2006 world, you can see that Microsoft has had big aggressive moves up and then valleys, big aggressive moves up and valleys. And that has largely tracked leverage and liquidity, capital, all capital in the world, M2 plus the shadow banking, the way that Michael Howe assesses it. It's flowing, ebb and flow, ebb and flow, ebb and flow. And it really comes down to understanding and timing. When do you get back into some of these names? When do you ride the momentum of these names? And we are approaching the top of that cycle, but the top of that cycle doesn't come until next year. So what's on tap? I've continued to argue. I think we're going to have another round of QE, but they're just going to call it something different. They're going to probably need to step in and provide some capital at some point. And take a guess what happens. You only get one guess. All roads point to higher liquidity, which points to higher equity prices, earnings, and valuations. Be damned. All right. It is 9 o'clock, which means one thing. Skipped it. The runner. Got to keep the trains running on time. All right. What do we got? So What did happen to that floor? That was the move on gold. You saw gold move very briefly yesterday and continuing that move lower. Labor market weakness, a lot of layoffs across key sectors, reinforcing the case for policy easing. But again, the Fed remains cautious. We're watching gold again, just paying very close attention to the 3-day, paying attention, or 3-minute, paying very close attention to the 15-minute. Trend of gold remains the same, lower highs and lower lows for now. We are in a channel. We are in a negative channel right now for gold prices. So we peaked out right up here, and we have been ebbing to the other side. All right, what do we got? Rivian. Oof. Rivian starts your day with a car that I don't know how or where people are going to get the parts if this company ever goes out of business. They're still not profitable, but boy, are those lights bright right on the front of that car. You flash at people, you go, hey, turn your brights off. They're like, nah, it's just my normal lights, man. Oh, well, I'm blind. Consumer cyclicals, auto manufacturing. The strength is here. The chop is here. This can go really either way, but we're seeing a little bit of strength here, a little bit of support. That strength in that MFI, there's been a lot of volume, and you can see the MACD turning positive as well, moving in the positive histogram. It's a tough one, right? Because again, we haven't seen the 8-day push back above that 50-day moving average. The 8-day EMA is that orange line, and there is that purple line. That's our 50-day. So I want to continue to follow the momentum. If I'm going to focus on this, you got to keep a very tight stop on this. RIVN is the ticker, of course, but I would like to see the 8-day catch up a little bit. Otherwise, this is going to roll right back over and probably retest both of these moving averages, and it's only about a 1% move, which isn't terribly exciting. But if you go out about a week and a half, or even out to the 21st, November 14th, just to keep some defense in play, buy the 1250. No, you don't. You buy the 13, and you write the 1450. So that gives you November 14th, buying the 13, selling the 1450. That gives you a setup where you're putting up $73 to make 77, 105 return on risk. 1373 is your break even, 46% probability of profit. But if you break down here, 1335, that's going to be about a 12% loss. So again, keeping a very tight stop on that spread. 1450 for November 14th. Huzzah. FRD, great company. One of the best. One of these names that reminds you that you just have to be patient and wait for the technicals to set up. Now, one of the challenges with FRD right now is the fact that the material space is under some pressure. But monetary expansion, monetary policy from China is supportive. And as we know, monetary support from China creates strength for a variety of commodities. Copper. Where are we? Where is copper? Where'd you go? Man, I am blind today. There we go. Copper's still holding up, 512. And we can thank China and its supportive accommodation for this. Steel, same thing. So FRD, the tiny little company in Texas, $145 million market capitalization. They make pipes, copper piping for the energy space. They make sheet metal for shipping crates. And they're bouncing back. What am I doing here? Buying the stock, holding it, 2060, so about a 2% stop, but trying to follow momentum here and looking for a move. See if we can get back up or even up to that 23 level. The stock has been rock solid in recent years and just continues. I view it as a takeover target. Book per share is 19.45. So just keep that in mind. This is actually it's not a value stock, but great performances over the last 10 years. Definitely a great performance year to date, 37%. You wouldn't even know that this company was here if you hadn't joined us this morning. Workday, what do you do? Well, once again, who cares? What? Workday named a leader in Gartner Magic Quadrant for cloud. People still read that? Oh man, I was forced to read the Gartner Magic Quadrant when I was a consultant in my 20s. Ugh, that was a tough one. Pretty simple, right? They're laying people off, and that is not good for software application companies. These stocks have been under a lot of pressure this year. Year to date on Workday, down 10%. How much further can it go? A lot. It's under its 20, it's under its 50. Tough stock to trade because of the spreads. But if you're a person who does want to short stocks, 4.6 seems like a name that Professor Bierman would be watching. But if we look out, it's very expensive to short a lot of names like this, particularly out a week, week and a half. But wide spreads, 40 cents. The 230 is currently around 475. That's probably where I would keep my attention, or I would look up at the 235, which is currently at 725. Try to get that at around 720 if I can. I'm not going to try to do a spread here. I would just straight look for a move down to 219. Again, they're laying people off. Beyond Meat is back, and it's awful. Remember that? Remember how everybody was excited? Oh my gosh, it's going to the moon. It didn't. It crashed right back down to earth. Final results of the debt exchange officer confirming issuance of over 316 million new shares, new convertible notes, with final settlement for remaining notes expected tomorrow, diluting existing shareholders. Funny how that works. Funny how that works. Well, again, Beyond Meat is going out of business at some point, or they are going to go the private equity route. And then it will be stripped for disgusting parts. Garrett, we don't think you like this stock. What gave that away? I like just buying the $2 put on this. Currently at 60 cents for November 21st. It's down 5% more today. Hey, don't be shocked if we're at $1. 36% probability of profit, break even at 140, 60 to make 140. Keep a tight stop right back up at around that $2 level the next couple of days. If you hold it at the $2 level, if this breaks, say, to 2, the worst would be about a 15% drop, maybe about a 20% drop. So a tight stop. If you want to sell a put, you'd sell down around the $1 level too, just to maximize your upside. All right, last things, JD. Looking for a hold and bouncing at these key levels. Again, cut if the MACD rolls over. So JD.com, we're looking to see what is happening in China. Going to have to give this a little bit of breathing room. We want to see this back above its 20 and back above its 50-day EMA, simple moving average. It is not there. So scratch it for now and wait to see if momentum returns and what China is going to be doing. And then, of course, the Greek shipping stocks are they're just looking better and better. Buying the stock. ECEA. Staying long, looking for a move back to 65 if we can get there. Cutting at 55. All right. Cool. All right. Excellent. And we fund the whole project with certain situations. Thanks for asking. Okay. FRD back in July, you brought this name up, was at 13. Good company. It's so hot. Man, what is going on? My wife must have turned the heat up and didn't say anything. Cardinal Health, absolutely rocking and rolling right now. And that's what we're actually paying attention to. We're looking for biotech and healthcare to kind of be the buffer right now as the rest of this market remains under some pressure. Cardinal had a big move up. The question is, will this spill over into some of those bigger names? Are we going to see the Cardinal Health, particularly on that longer term chart, the weekly and the monthly, get back? But once again, a lot of chatter about Obamacare subsidies, a lot of chatter about government spending. So CAH, I want to be a little bit cautious, right, after that move this morning, because keep in mind, when you come into a day like today, where a stock like this rallies, well, what ultimately transpires and where you have to be cautious is trying to chase this. So remember, the key thing to pay attention to on a day like today is volume weighted average price. So let me open, if I can find it, and I probably cannot because I'm not good at finding things. Oh, technology. Every day you guys get to watch a man in his mid-40s completely and totally fail at basic technology, which I think is worth the price of admission. I'm just going to say that. The fact that I can't get a very basic thing to load on a computer that's brand new is operator error. So keep that in mind. By the way, TradingView doesn't want to work either. We're killing it this morning. So what do you have to do? Well, you got to move over. And hey, did you know that volume weighted average price, you can use it, you can find it almost anywhere. You just got to know that you have to set it up. So get rid of my 20, my 50. My apologies. VWAP for intraday charts, purple line. That's fine. Here's your SPY. Here's your 15-day. Here's your 1 minute. Volume weighted average price. All right. You can set this up on Thinkorswim. We have videos on how to do that. You want to set up your first, your second, and your third standard deviations. And you want to do the same with TradingView if it ever worked again. It doesn't. It is gone. Okay. Well, here's the thing. If you look at CAH and the way that it has moved this morning, you're going to be keeping a very close eye on the 1 minute volume weighted average price, and also just keep a close eye on where it sits in overbought and oversold with MFI. Relative strength index is the price oscillator for momentum price purely. MFI is price and volume oscillator. So what we're looking for is some sort of bounce back, snapback pattern, where if the company, if you're trying to trade this today and you're in CAH and the market opens and you're way up here, that's an issue. But if you're down here, and we're going to be talking about anchored volume weighted average price today at the NVIDIA 4D, we're going to talk about anchored VWAP and how we apply yesterday's closing price to a name like this. If you're chasing any of these names, or you're trading any of these names, you're either looking for a move from oversold back to volume weighted average price, or you're looking for a continuation of trend above volume weighted average price. So a name like Meta today, right, is under its volume weighted average price. It's gotten beaten up. It's down 10.4% today. Couple of moving parts. One, don't be shocked to see a lot more pressure and a lot more panic, because again, this is a name that is heavily owned by many, 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 many people who have chased this stock to all-time highs. What you're going to be looking for, though, at some point today, and it could come in the first 15 minutes or it could come in the last hour and a half, is a reversion back to volume weighted average price, which, by the way, is $10 away right now. And if you get that reversion, keep in mind a couple of things. One, when this market opens, all of the options that are expiring tomorrow for Meta are going to see a deep compression in their pricing, right? So people who were betting to the upside and to the downside, again, the big news is out of the way. So now you're going to see the options for expiration for tomorrow, particularly around the levels that we were at yesterday, get crushed. Okay. But keep in mind, if you're trading volume weighted average price and you're looking for a reversal, even if it's a very short move, it could be a $3, $4, $5 move. If you're using the option for tomorrow and you're setting a line in the sand and you're keeping a tight stop, that can lead to a very robust, big return for tomorrow. So even if you're day trading it today or you're looking to go long, or again, it's all about understanding where you are at any given moment around volume weighted average price. And same thing goes for the companies that are breaking out, right? Google is under its current volume weighted average price this morning, but all of these stocks, Google, Alphabet, Amazon, they all have leveraged ETFs. They all have 2x ETFs that you don't have to even trade the options. All you have to do is know that there is a Meta 2x leveraged ETF that exists because we don't make things in America anymore except for very wild financialized products that allow us to try to make a big profit off of behavior in the financial system. So this has moved. The double X Meta daily ETF has moved from 44 to 45.50 to 34.40 this morning. And what will you be looking for? The possibility that this snaps back, because covering, people come in and they cover. And let's be candid, Meta is one of the most leveraged companies, or forgive me, one of the most heavily owned stocks in the world. It is very heavily leveraged. A lot of long hedge funds own it. They lever it up. A lot of the selling right now, the noise is going to be around the earnings. The noise is going to be around the AI infrastructure stuff. But the real story is the unwinding of these positions by leveraged funds. Because trust me, they are levered to the tilt. And a little bit of bad news can lead to a sizable loss for a fund if you are borrowing $100 million, or you have $100 million, and then you take it to the repo market and you lever it up to $22.5 billion. That's a thing. So we're going to look for a snapback. We're going to look for those opportunities as they come, and they will. And they will. So be focused, be determined, take gains, and make sure that you keep very tight stops. What is happening? It's getting weird in this chat. All right, for every drop, there is a pop. Every pop, there is a drop. VWAP will help you keep you in line, pay attention to GB. Well, I thought that you were going to somehow rhyme something with line, but we're going to forgive you. It's 9:20. I hope everybody has a great trading day. I'll be back at 1 o'clock today for our NVIDIA 4D next course, where we're going to talk about anchored VWAP, and then back at the bell for today as well. And remember, tomorrow, I apologize ahead of time. I will not be here. This is the first morning show that I will miss, and I assure you it will be the only one that I miss this year. That said, my daughter has her annual Halloween parade, and that is like missing a birthday party. So I will be there. It starts at 9 o'clock, which means I need to get there at 8:30 because the parents are crazy, and we'll get there at probably 7:30 just to park. So I hope you guys have a great trading day. I will catch up with you in a bit. Don is coming up right now. Take care.